Hello, everybody. Kirk Spano here, stocks of the week and retirement income options. Going to go over a few things, but first, have had a handful of new subscribers who seem to be a little bit more tradey. So I'm going to give you some resources if you really think that you can be better than 4 out of 5 traders out there. And remember, if you're at margin of safety and you really want to trade and swing trade, we'll have to migrate you over to fundamental trends where Shooter can mentor you and you can take part in the new chat room, which appears to be launching on May 19th. So we will get that up and running as soon as we can. But May 19th does seem to be the target. All right, what do you want to read? Well, the first thing is, and this is for everybody, Getting Started with Technical Analysis is a book that I've had posted on the website a couple times. This is a great book, classic book. Read this, and that will teach you the language of technical analysis. And it'll give you all the basics that you need. If you are a long-term position trader, like 90+% of my holdings, then this is probably all that you need. It will give you the basic understandings, the background, an ability to think about why the market does what it does, and that's important. And then you really don't need much else because you're not trading week to week or month to month. But just the fact that you may need to understand why there's a spike or a crash, what it's really reacting to. Is it truthfully playing out the fundamentals of a company, or is it just traders being traders? That gives you an opportunity if you happen to want to buy something. So take a look at Getting Started in Technical Analysis. It's a book that if you manage your own money, you should own. You should buy the book. You should read it. You will find value in it. If you don't buy it and you ask me why something went up or down, I'm just going to tell you traders being traders, because it's not a valid question if you don't do any work. By Getting Started in Technical Analysis gives you everything you need to understand this fourth step in how we buy and sell. Now, if you want to take a look at Shooter's Elliott Wave charts, he has a user guide here that'll help you get started. And then there's a video that he links, Getting Started in Elliott Wave. So that is something that, and it's not even his, he just found it on YouTube and he likes it. So take a look at this just to get the basics. Now, for those of you who really want to trade, you guys who are going to defy the dentist, remember 4 out of 5 dentists say don't trade. Here's some books that you can use as a deep dive. Consider it the bachelor's degree of trading. Elliott Wave Principle, Key to Market Behavior. This is the classic text on Elliott Wave. I like this book, Elliott Waves Made Simple. You can read this in a week and get a pretty good understanding. At a minimum, you'll be able to read the Elliott Waves that other people put out there. You may not be able to do it yourself quite right away, but you'll be able to understand what you're reading. So it's kind of the difference between being a really well-informed layman with like me on science and technology, being able to understand what the scientists are telling me versus actually being a scientist. So that is something that I think would help you, both books. This one here is free on a slide show with the PDF. So this is part of the charts that Shooter uses. I'm going to get some advertisements here because we're giving you the book for free. These are all available on Amazon as well. And then some things that I use. You've heard me talk about order flow and volume profile and volume weighted analysis. This book here, Smart Money Tracking Using Volume Price Action Analysis, very worthwhile. I think it'll help you understand a lot of the things that I talk about. The Wyckoff methodology in depth. So Wyckoff basically has been around, decades and decades. Just describes accumulation, markup, distribution, and markdown. So when you hear me use these terms, this is where it's coming from. Accumulation is generally when the super rich people are buying something. Markup is when retail gets into it and they push it up with FOMO. Distribution, at this point, the smart money starts selling to all those FOMO people. And then markdown is the people who had FOMO are like, oh, it dropped, but it'll come back. Oh, it dropped again. But I'm sure I should probably buy it here. And then it falls apart. So that's the whole up and down cycle. Smart money buying something, then they eventually just wait, let the FOMO happen, sell into the FOMO, and then retail finally runs away because they did it wrong again. Now, Wyckoff 2.0, this book, combines volume-weighted price analysis with Wyckoff to give you a very nice way of understanding what is truly going on in the market. Now, I mainly use this. Shooter mainly uses this. And that's why I say when we end up at about the same place on a price target, it's probably a pretty good price target. Now, one thing I will tell you again, and I decided to make it real clear, swing trading is a job. It is not an add-on. It is not something you should do if you don't have the time to study and to really understand what all the charts are telling you. For the most part, we only swing trade the plug and play lists because those will generally be long trades. We will do some macro hedging and some shorting of shit stocks. But for the most part, we are just looking for long investments, times to buy the pullbacks, and times to get initially involved. Also, times to trim, take a little profit, or sell covered calls. It takes a lot of work. So if you're going to be a swing trader, understand that it's a job and you have a lot of studying to do. Also understand this. It's a lot like poker. If you don't know who the sucker at the table is, it's you. Now, in this famous scene, Paul Newman goes into a poker game pretending to be drunk and wins all the money. I've used that exact same shtick in poker tournaments at bars all over the southeast Wisconsin and in a couple other states. If you can convince people that you are something that you're not, if you can convince people to look the other way while you're doing something over there, remember the movie Swordfish, misdirection? That's what most narratives are in the stock market, are misdirection. And with the advent of the internet, it is something that usually gets planted by smart money that wants to accumulate or distribute what they already own or are looking to own. So understand that these narratives that hit headlines that you see on Twitter, that you see in Reddit, that make it into the stupid articles in the financial press are just that. They're people talking their book, and don't you wish you knew what they thought yesterday, or at least what they thought but didn't say yesterday. So ultimately, most of you just get the book, Getting Started in Technical Analysis. It'll give you all the things that you need to make long-term position trades that you hold for quarters or years. Anything shorter than those time frames takes a lot of work, which means that you're going to be spending time on that versus if you have another job or you're retired and you'd rather travel. It takes a very special person to be a swing trader. Teresa in our chat room swing trades. She has a unique situation that allows her to do it. Shooter obviously trades full-time. And just understand these are the types of people you're up against if you are going to trade, right? Consider who you're up against. Semi-retired professionals with the capital to stay home and trade their own book. The hedge funds, the quant shops, the big investment banks, the high-frequency traders. And they all have more data than you have, better technology, more experience, deeper pocketbooks. They are well-capitalized sharks with supercomputers that swim in packs. And sure, you can be a pilot fish skimming and scalping along the way as long as the sharks keep going forward. When those sharks don't see a lot in front of them anymore, they're going to turn around. What's the first thing they're going to eat? The pilot fish. So again, if you think that you can be a top 20% trader, I'm not going to tell you not to try, but I want you to understand what it entails, which is time, a lot of education, and sacrificing money that you could have made somewhere else probably. I mean, you certainly don't want to quit your job to be a swing trader. I've told you the story of a fantasy baseball draft that I went to in 2021, where two guys told me that they hadn't gone back to work because they were trading their own account. One guy says, I'm a chartist now, quit his job and whatever the heck he was doing. Didn't even try to do it from home. Just took the money from the government, started trading his account. There was a lot of that went on. A lot of people who thought, well, I've got this unemployment check. I'm sitting at home. I've got the bonus money from COVID. I'm going to start trading my account. And they did really well while quantitative easing pushed everything up through about the end of 2021. Can I tell you something? I went to those fantasy baseball drafts again this year, and guess what? They went out and got themselves a gerb. They got themselves a gerb again. They got a job. Swing trading is a lot like poker. 100% of the money made is made by the top 20%. And really, most of the money is made by the top 2%. It's a curve, and it's very steep in those last couple of percent. So even if you're a top 20% trader, if you're closer to the 20 percentile than the second percentile, certainly don't want to quit your job, your day job. And you just don't want to put the time into it, because you will need to put 20 to 30 hours a week minimum to be a swing trader. And really, it's probably pushing 40. And the only reason it's not more than that, it's not my kind of work week at 50 to 60 hours, because it doesn't require quite as much reading on the fundamentals. You can be a swing trader with only cursory understanding of the fundamentals because you're mainly trading the technicals, because you're short term. Companies don't have enough time for anything to happen in the short term, which is why in the short term, those big price movements that you see are just traders being traders. Chase it that way. Now run away. Chase it that way. Run away. That's all it is. For those of you old enough to remember the beer Bud Dry, they had a slogan. Why ask why? Drink Bud Dry. Same thing about these stock movements that you see. Why are you asking me why? It is just traders being traders. Run away, run to it. Run away from it, run to it. And if you're going to play that game, you better be fast. You better be smart. You better recognize things like Neo did in the Matrix. When the bullets come flying at him, he recognizes it's just code. He picks those bullets out of the air. And I promise you that if you become a swing trader, you are going to get shot at a lot by snipers and heavy artillery and everything else that can be fired at you. So again, I'm not telling you don't do it. I'm just telling you, understand you're going to war. All right. Earnings calendar. What's on deck? Well, it's tech. Microsoft, Google, Meta, Amazon. They're all coming this week, except Apple, which is next week. And Wall Street Breakfast put up a little poll. Who you think will do best coming out of this? I picked Microsoft, which ended up being the one that won. Why do I think that? It's because their AI story with ChatGPT is probably the one thing that any of these guys did in the moment that's going to generate them new revenue this year. So that probably is enough to keep Microsoft from having anything horrible happen to them, although there is some CapEx involved, and that might confuse people in the moment, because most of the price movements in the moment are what? Most of the price movements in the moment are what? Who doing what? Who being what? Traders being traders. So if you're going to learn about a company that you want to own for a long time, and Microsoft is on that list, then just learn the fundamentals and understand the business and stop going, oh, red light, green light, red light, green light, because it doesn't do you any good. And on certain days, it irritates the shit out of me. Now, going through this list, I think Amazon takes a little bit of a hit. I think Alphabet takes a little bit of a hit. I think Apple takes a little bit of a hit. I think Meta takes a little bit of a hit. I think Microsoft kind of holds steady. Why? Alphabet is going to have to deal with the threat from Microsoft and governments, and they're going to have to come up with a plan to finally birth those baby Googles that I've been talking about. Somebody brought up CenturyLink the other day. I have said for years that Alphabet should eat CenturyLink and get all that fiber. Speaking of fiber, we'll talk more about that in a second. Alphabet has some heavy lifting to do in the short run. They'll come out of it great. We're looking for a price. Amazon, like Alphabet, they are also going to disrupt a bunch of other businesses. They've already done most of their heavy lifting, but they're a bit economically sensitive. So they could take some pain just on what's going on with inflation and the uncertainty there, and whether or not consumers will hold up through the summer. Apple. I have argued for a while now that Apple is pretty fairly valued, and that their upside from recent prices just isn't that great. Not until we start seeing a big wave of new houses being built and people eventually switch to the EVs. Those two things are the cross-selling that lock people into the Apple ecosystem. Apple is at this crossroads now where they've pretty much maxed out what they can do without cross-selling even more. So they need this next wave of new houses to be built because they're going to be smart houses and they're going to get a piece of that action. Although Amazon is going to get a lot of it too, as will Google. But if they finally have an Apple car, and maybe they have GM manufacture it for them, or Ford. I can't remember who's already cutting a deal with Apple. But somebody builds Apple a car, because I don't see them building a gigafactory. Why? Why bother? You know, you have in the food industry, you have packing companies, right? Apple should just go find themselves a packing company. Here, this is the specs on the car, this is what it does. Incorporate the technology into all your other cars, but sell this one for us. Big markup, prestige vehicle. The Cadillac Apple. Ooh, whatever. Lincoln Apple. Meta, aka Facebook, aka Zuckerberg, with a letter replaced at the starting end. Meta is unique. They have consistently moved in the direction that I said they would back when they IPO'd, which is they're just becoming an app that takes the place of your old phone book that you kept next to your corded telephone. All your contacts are in there. You have a couple different ways of accessing that. You can spy on your friends if they post pictures of their kids or their meals or their trips, right? Facebook's added the marketplace, which keeps people on it because that's become a big deal. Facebook is probably going to be more of an everything app than Twitter becomes when it becomes the X app. However, they're also pushing into the metaverse, and augmented reality and virtual reality is a thing. There are multiple, once you have the technology, there are multiple ways that you can use it, whether it's for industry or entertainment or somewhere in between or finance. Probably made a mistake not buying Meta close to 100, whenever that happened, was that a couple of years ago? But if it drops down well into the hundreds again, if it takes a 30% digger, or 50% would be wonderful, I could look at it again. Meta is a stock that I really just don't see buying. I think it's a slow growth forever stock, not terribly exciting, unless they start throwing out a dividend, which they should. And if we ever get wind of that rumor maybe really happening, then it's a stock to buy because they're uber dripping in cash. All right, told you to talk about 5G. So I'll have this written in a little while. It's not going to matter if you miss by a day. AT&T's earnings came out, and the fiber sales were spectacular. You were listening to the earnings call before we went on air here today. Very simple takeaways from AT&T. First off, free cash flow ended up not being quite as high as the analysts wanted. It was like 1% off or 0.5% off or something. Well, I would say that that's probably the analysts just not understanding what the hell's going on at AT&T, which is they are paying down their debt. They're building out fiber, which is ridiculously sticky, high margin business. As I have told you in the past, when you get a chance to have fiber, you're going to buy it because it is blazing and it has so much more capacity. And in a world with a metaverse and AI and AR and VR and all the data packing that has to go on over the wire, AT&T probably has the best thing going. Comcast is doing it too. So that's clearly a company to look at for dividend investors as well. AT&T, one of the things that the CEO said was, look, where we put AT&T fiber in, we win that market because then people bundle their 5G as well. And this is why they haven't shown much churn in their 5G business. First of all, the prices of all the services have basically converged. There's not really much price competition that can go on anymore in 5G and cell phones. But if you can bundle your internet with your 5G, something that the cable companies try to get people to do, but they really don't offer legitimate national 5G. It's more regional 5G with, by the way, it'll still kind of work if you go somewhere. AT&T can say, look, we basically have the best connections, the entire continent, into Canada, Mexico, right? Down in the Caribbean. AT&T is very big, and they have the underground cables for data, and now they're putting fiber in across the country. 272,000 new subs last quarter. Fiber is enough to make AT&T a winner. Their debt is refinanced at 4.1% on average. It's been pushed out. They already have twice as much free cash flow as they need, give or take, to pay the dividend. And as I said, 3-4 years out, they're going to start talking about buybacks because that shrinks the share count, reduces the amount of money that has to go out as a dividend without having to reduce the dividend. If you're a retiree, just that part of the story should be enough for you to say, I'm going to buy this because I like that coupon. And I know the interest rates are going to come back down a few points. So buying AT&T under $18 a share, if you're a retiree or about to become a retiree and you want mailbox money, you should be buying this. But wait, there's more. I dare you to find an article on the internet that says what I've been telling you for the last year or so. The AT&T has a wild card. It has a couple wild cards, but this is the big one. Let's start with the little one. The little one is that they'll be able to compete with Roku over the fiber. You won't need a device to download apps to your smart TV, to have a menu of things that are available to watch. They're going to be able to create a home screen, and they're doing it. And this isn't imaginary, it's happening. That allows you to do everything that you can do with Amazon or Roku just over the home screen on your AT&T fiber. Want to download HBO? Here, click here. We'll put it on your AT&T bill. Want to download Netflix? Here, click here. Now, there you go. Now you have Netflix, and it's on your AT&T bill. Very easy, right? Makes managing things a lot easier. And I believe that that's the easiest way for most people to do it, right? Apple tries to get you to buy the apps through them. Amazon tries to get you to buy the streaming apps through them. Roku tries to get you to buy the streaming apps through them. It's a whole nother bill. And granted, half of us have Apple. Most of us have Amazon. Is it half the adults have both, right? I'd have to look at the numbers again, but it's around half of the adults in America have either an Apple phone or Amazon Prime or both. I have both, but I don't really buy any apps that aren't specifically for my phone through Apple, right? So I have a little plant app. It tells me whether a plant is healthy. Well, it tells me what kind of plant it is. It's like $9.99 a year. I play in the dirt, so I buy it. But I don't buy Paramount Plus or Netflix or HBO through Apple or through Amazon. I actually just buy them direct because that's how you get the best deal. Cut off the middleman. But if you could just buy it directly through AT&T because you have AT&T fiber, and that's where your 5G bill, your cell phone bill is too, that's pretty powerful. I think Roku's got more problems coming. I think they just have to get bought out. I like my Roku TV, I really do. But it's not that it couldn't be replaced pretty easily. And then I just have to be the old man that grumbles about going through a new learning curve on the thing that I get next. And it's coming anyway, because I'm buying a house, and at some point, just having a hard time deciding where and what I'm going to buy because of the grandkids. It's the one thing that keeps me in Milwaukee. Well, first it was the kids, then it was the grandkids. Probably just going to use that second house money to go on a lot of month-long trips. In any case, the big thing that could happen for AT&T is that the technology with AST Space Mobile works, and the most recent reports are that it does. They're fine-tuning it. The data transmits. We know that now. We know that the cell phone on the ground and the satellite in the air are communicating with data. American Tower bought 5% of AST Space Mobile. Should you? Why would they do that? It's because the tech works. You got to figure out how to fine-tune it. Takes a little time, a little trial and error. Scientists being scientists, a lot more reliable than traders being traders. AT&T is an American company with global reach because of the fiber under the ocean. All the talk about America's ending hegemony or the dollar becoming less of a reserve currency, whatever. If you're in an emerging market or even in Europe, it doesn't really even matter where you are. And you want to add access to the United States, you buy a phone on our networks. And AT&T could offer that in the next couple of years because of AST Space Mobile. And they're starting with the emerging markets along the equator. AT&T can become 3 or 4 or 5 times bigger in the next decade or so. Will it? I don't know, but it's going to get bigger. Don't know what percentage of people are going to buy an AT&T network phone out of the emerging markets. But given that they don't have a lot of towers and it's going to come from the satellites, AT&T is going to be one of the choices, and they might have some sort of data that's on the AT&T network to begin with, if they're near a coast especially. It's a lot of people that could end up being AT&T customers that aren't here right now. AT&T is the name in U.S. telecommunications. They ain't Verizon. They don't have as many cables. Ain't CenturyLink. They're falling apart. Could be whoever buys CenturyLink at some point. Lumen Technologies. CenturyLink, same thing. They used to be called CenturyLink. Now they're called Lumen Technologies because that was a sexier name. It hasn't mattered. Stock still went down 80% since we sold it, so I'm glad I sold it. If you're a retiree, none of this extra stuff matters to you for collecting that dividend in a safe, secure way with a little bit of growth. But I'm telling you is that there's a potential catalyst for a lot better price appreciation in the future, and that dividend getting fatter as they start buying back shares, especially if they become a more global company. This is one of the best retiree stocks on the market. Utility-like income and the potential to double, triple, quadruple, maybe quintuple the size of their business by going global. On the back of, hey, technology. What else could it be? All right, late in the cycle, commodities normally catch up to the rest of the market. And we've started to see that happen. Seen some rallies, seen some pullbacks. This article is actually at Wisdom Tree's website. I get it through Interactive Brokers. I actually subscribe to them on Seeking Alpha as well. A lot of talk, a lot of breathy talk, a lot of narratives about the commodity super cycle. Yeah, I've told you I don't really believe that. I believe that there will be a few things that do really well because of the electrification of the economy. We have learned that there are other ways that the cars might use magnets or might build magnets into the motors to reduce the amount of rare earth metals being used. So that story, not quite as sexy as it was before technology lent a helping hand. Take a look at all the other commodities out there. Lithium. Elon Musk is begging for more lithium. It's coming, and the technology is reducing the amount of lithium that's needed. So while there are growth stories in rare earth metals and lithium, probably not as much as it could have been. And there's been a lot of money going in those directions. Iron. I just wrote an article calling Cliffs a zombie. It's going to stay undead for a long time. I'm not going to go out and make a lot of money, though. There's no shortage of iron or steel, especially after what the United States has pressed into the last decade. The last 3 presidents have all propped up the American steel industry. Not going to be a shortage of steel. The only commodity that I really see potentially having a shortage on the industrial side is copper, because it's getting harder to find copper, the same way it's getting harder to find gold. A lot of times they're found in similar places or the same places. So I like gold and copper, which means I like Freeport-McMoRan. If I can get it at a cheap price, I'm buying a lot of it. If I can get it at a fair price, and I happen to want an S&P 500 tracker with more upside, probably buy it then too. Not quite where I want it just yet. Not falling into that technical analysis, right? The fourth part of our analysis that makes sense. Not yet. Rio Tinto, I talked about last week. They're more iron ore than anything. Not sexy. It actually does beat the S&P by a hair maybe, but only if you buy it from the middle or bottom of the cycle. You buy it in the top part of the cycle, you're screwed. That's probably where you're buying it right now if you buy it. So Rio Tinto is really not even on our list, but Seeking Alpha asked me to write a story, and I'm just about to finish it. Take a look at the stock screener. Use a monthly RSI. See that suddenly there's a few more stocks that are overbought. First Solar got a downgrade today, so I'm staying away from them. If you own them, you should be trimming them. The oscillators taken all together are at sell right now. Generally don't want to be buying something that says sell. The neutral ones are the ones we got to figure out. And then you apply valuation if it says buy. So this is for short-term traders if you're going to get in and out. But it only really matters to the long-term trader if you like the company in the first place. So oversold on the monthly. Same companies that we've been looking at for a while. That I don't like WeWork. I don't think Rivian's all that sexy. I think they just get bought out for cheap. Lumen Technologies, there they are. Interestingly, when did we sell this? At 10 or 12? It's down to like 2. There is an interesting story here with Lumen, right? Wonderful chart there. Down, down more, down, really down. This price down here probably doesn't make any sense because the value of their assets are probably higher than their debt because you can't replace the data that they have, the data wires, stuff that goes over the ocean. They're second biggest behind AT&T. So if you're interested in Lumen, and I haven't done the math, what you want to do is just figure out what's the buyout price for their assets, more or less than the $2 it's trading for. Do they have to go bankrupt first? Maybe, right? That's the hard part. Do they go bankrupt first? But I've always thought that these fiber assets are worth a fortune. They're transatlantic cables, and I think they have some in the Pacific too, are worth a fortune. So we'll see. We will see what happens there. ARK put out an update on Tesla, and here's the key paragraph. They're talking about Tesla going to $2,000 a share, which would make it about a $5 billion company, maybe $6 billion. I told you it'd go to between trillion. They're talking about a $5 trillion company here, or more. I told you between 1 and 2 trillion, almost as a certainty. Here's their estimate. 2/3 of that 5 trillion to 6 trillion valuation is based on the robotaxi, which I told you ain't going to happen this decade. They're saying it has to happen by 2027. It's not going to happen. Will it happen eventually? Yeah, maybe. What if Uber just cuts a deal with GM and they do it instead? Or Lyft? Lyft can't get any traction on their share price. They got the same technology as Uber. Why not just merge with Ford or GM? I think that's actually going to happen. So to me, Lyft is a better deal now than Uber, even though I like Uber. So I think Uber is just going to win as the autonomous company for robo-taxis eventually. I think Lyft gets bought. Maybe Uber gets bought too. I don't know. But for Tesla to force their way in, right, that just adds another competitor. And how many of you, if you buy a Tesla, are really going to click the little button that says, oh, send it out to the public while I'm not using it? I'm not sending my car out to get driven in by people I don't know. I think that's way overstated. So if you strip out this robo-taxi money for Tesla, you end up with a $1 to $2 trillion company, right? So if they're at 5 to 6 trillion, but 2/3 of it is robo-taxi, right? $1 to $2 trillion company, just like I told you. All we're looking for right now is a spot to buy Tesla, because you're going to make 2 to 4 times your money almost as a certainty. It's going to be a $1 trillion to $2 trillion company. You might get lucky and have the traders be traders, and for a hot minute, you get 5x. Again, depending on how high it goes and how low it goes in the short term, right? How high it goes in the next 5 years, but how cheap it gets here in the short term. So take a look at her research, strip out the robo-taxis, and it matches what I told you almost exactly. Difference between Kathy Wood and me on Tesla? No robo-taxi. She's yes robo-taxi, I'm no robo-taxi. Now, what if she's right and you bought it based on what I said? Gravy on the cake, right? Who cares? If all of a sudden, 3-4 years of holding this, the robo-taxi shows up, we'll be like, oh, guess I'll hold it a little longer. There you go. All right. Somebody asks about Southern Copper versus Freeport-McMoRan. There is not a better copper company in the world than Freeport-McMoRan. I'll make it that simple. There just isn't. Really not even close. So if you want copper, you buy Freeport-McMoRan. Stop screwing around with second best. All right. I will get this up and I will publish the AT&T alerts here first. Think you can buy AT&T under 18 or sell the $18 puts July and just ask for a nickel or a dime more than the current ask. Set it at good till cancel. Let volatility get it to you. And I think that is what you can do, is just make AT&T a full position if you're a retiree or about to become a retiree. If you're a growth investor and you just want something paying dividends so that you can use those dividends to buy other stuff, you can do that too. This is a pretty easy way to have income pouring into your portfolio, and then you just have to decide what to do with it. Have it sent to you because you're going to spend it, or use it to buy small cap stocks. Easy button. All right. Take care, everybody.